Concerning the environment that is not the distracting element, Elon, or one of the things you hear about a lot, uses Twitter. At this point, he talks about using generative AI. He owns SpaceX. He seems to be the only proprietor of Twitter as a private enterprise. There was a time when we heard that many Tesla engineers were showing up on Twitter's doorstep to try and assess what's really happening. Tesla is a public company, SpaceX is a private company, but there are a lot of investors there. Yes, he does move these engineers around from place to help in specific moments. People at SpaceX are now aware of the whole generative AI situation, and he has a lot of influence and a large number of AI employees at Tesla that he plans to use elsewhere. How should a shareholder feel about that? In a more conventional setting, people would say, no, you know that guy works for you over here. But he does not work for you over here. However, in reality, this drives some extremely significant advancements, such as SpaceX's metallurgy engineers, materials engineers, who've really transformed the way that Model I gets produced right, and so you get these big breakthroughs by moving that talent and context, switching them. So yeah, I can understand one side of the story, where investors are upset on the other side of the story that doesn't really get told is how much value they add back to Tesla as they come in and help. Who should be blamed for Tesla's plunging stock price and lower earnings is the problem with Tesla itself as a company or with its CEO Elon Musk, who many said may not be completely focused on the car business. See what a GM board member has to say. What do you make of this whole idea of these shareholders? We've had a bunch of them even come on the program now. If you sign this letter saying, look, you're doing too much, Elon, it's just too much. What do you think of that? I don't think he's all that distracted away from the business. Like on the earnings call, he was answering questions at a really deep level, like on how the C++ neural nets work, right? Like he's involved, and he has always had a lot going on, but he is incredible at managing his schedule and staying involved on the absolutely key topics, and you see like that they are still delivering more cars than they've ever delivered. I think anybody in the car business would love a 36 comp right on a quarter. And he's got a lot of merge into place. By the way, I don't disagree with you. What I can't figure out is, let's say he was paying more attention. What would the results do? Yeah. What would you do about the general economic environment, right? Exactly. And because they've got a lot of margin, they're using that as a weapon. And even though they've cut prices 6 times this year here, they still in the first quarter delivered more margin than anybody else in the industry after releasing its Q1 earnings report. Tesla received a lot of negative feedback, with many calling it a miss, notwithstanding the fact that the automaker exceeded Wall Street projections. As these remarks are made, John McNeil, the former president of Tesla and CEO of Dex Ventures, has stated that the company is still headed in the correct direction. He claims that Tesla is still the top producer of electric vehicles, and that, in just 5 years, investors may be investing in a business that will grow tenfold from its current size. Is he possibly correct on this one? We're going to find out shortly, though. Welcome back to Tesla Tomorrow, everyone. Before joining Lyft in early 2018, where he led the company as CEO for 18 months, McNeil led worldwide sales, marketing, delivery, and government relations for 2.5 years as president of Tesla. The GM Bond member has frequently discussed his experiences at both locations as well as the variables he takes into account when he makes realistic projections for the company future after they announce their first quarter profits. Investors at Tesla were persuaded by Elon Musk that product prices will either continue to rise or fall. Tesla is not launching a pricing war, according to Musk's tweets. Rather, it is only cutting prices to make products more widely affordable. Tesla reported that, despite higher car sales in the first 3 months of the year, overall revenue increased to $23.3 billion, up 24% from the previous year. However, profit fell to $2.55 billion during the same period last year due to price reductions and increased costs for commodities and raw materials. During a conference call to talk about the outcomes, Musk stated that he believed Tesla, which already stands out among electric car manufacturers for its profitability, was making the right decision in seeking higher sales at a smaller profit margin. The CEO of Tesla assured investors that long-term earnings would be robust and mentioned that the company's revenue may increase if cars are sold with recurring subscriptions for capabilities like self-driving, supercharging, and other features. Is Musk's plan for Tesla really achievable? And is the Tesla executive still the company's best candidate for CEO? In this video, we'll go into the specifics. But first, please hit the like button if you enjoy this kind of stuff. Enable notifications and subscribe to be informed about all things Tesla. Musk states that Tesla is setting the stage and that he anticipates the company to continue making some of the best profits in the sector. According to him, it makes more sense to ship a lot of automobiles at a smaller profit and then take that profit later on, starting in 2023. Among the top tech equities, Tesla has performed exceptionally well, primarily because of price reductions. Tesla reduced costs for its vehicles in the US once more in an effort to increase demand, following price reductions in both December and January. Reductions followed Tesla's announcement that it had shipped a record 422,875 cars globally in the first quarter. Early in March, Tesla reduced the cost of its Model S and Model X automobiles. Earlier in the year, the company cut pricing in the US by as much as $20, making some of its models eligible for a federal electric vehicle tax credit. Tesla continues to reduce the pricing of its vehicles, which is why Delta Mako cut prices vary from 2% to nearly 6%, with the biggest reductions appearing on the company's most costly models, the Model S and Model X. In the car sector, there are essentially two sides. On the one hand, some experts see an aggressive maneuver by the top EVs maker to absorb market share and sales from its rivals at the very moment when they are starting to release more vehicles. However, other detractors contend that since demand for Tesla's earlier models is starting to decline, the company is being compelled to lower costs in order to draw customers. While price reductions increased, demand for Tesla's cars also impacted the company's profit margin. According to Morningstar analyst Seth Goldstein, the company is attempting to find a balance between securing the best prices and maintain demand so that its factories run quickly enough to lower the cost of producing each vehicle. Not only has this hurt Tesla's value, but it has also had an impact on Elon Musk's wealth, with Tesla's share prices rising at an exponential rate over the last 10 years, more than 4,000% in the decades since the company's initial public offering. Elon Musk has witnessed a surge in his fortune. Additionally, he has more than 40% of the company's current shares in SpaceX, which was reportedly valued privately at $137 billion in late 2021. Elon Musk, whose wealth is estimated to be close to $300 billion, was declared the richest person in history by Forbes. However, despite continuing to rank among the world's richest individuals, Musk's wealth has significantly decreased due to his acquisition of Twitter and a number of issues at Tesla, including sluggish sales. A recent letter from progressive Tesla shareholders to the board of directors of the business requested that Elon Musk focus more of his attention on his duty as Tesla's CEO, one of his many occupations. Among other things, Musk is the CEO of Neuralink, SpaceX, Twitter, and the Boring firm. The group of shareholders said in the letter that Musk is not dedicating enough time to Tesla and is not paying enough attention to the problems the automaker is facing, such as growing evidence of competition from other manufacturers. The letter claims that Tesla is having issues because of Musk's lack of focus, but it doesn't specify how to get him to pay attention to those issues. According to the shareholder letter, we all initially included Tesla in our portfolios because we considered the company to be a true leader in creating goods and services that are necessary for our shift to a green and sustainable economy. But as time has gone on, we've become more and more concerned about the company's leadership and governance. The shareholders had expressed their belief that Tesla needs a board that will make sure the CEO is focused on addressing these issues, and they have also added that the board's inability to limit the CEO's outside commitments and guarantee he's focused on solving the numerous issues the company faces has caused them to lose faith in its members. According to Freshberg, the company is not calling for Musk to be replaced as CEO. Rather, they are asking that the boardroom become less clubby and more independent and investor responsive, and they may be correct. Elon Musk has had some difficulties lately. SpaceX, a U.S. defense contractor owned by Musk, recently launched its Starship Super Heavy spacecraft from its Boca Chica, Texas, facility during an orbital test mission. The rocket reportedly succeeded in taking off from the launch pad, but it also detonated, leading the FAA to temporarily suspend the program until additional investigation could be conducted. As pressure on Tesla shares grows, Musk may be forced to face some hard truths about balancing his other capital-intensive and heavily leveraged side ventures. Dan Nathan, a Tesla investor, recently brought attention to the massive debt that Elon Musk utilized to finance his acquisition of Twitter. Last year, Musk paid $44 billion for the social media firm, using a combination of bank financing and money collected from the sale of Tesla stock during 2022. The Internet mobile's net worth is in jeopardy due to a number of other problems with his businesses, but this may only be the case temporarily as these problems persist. Musk is known for his ability to constantly figure something out. John McNeil concurs that Musk is committed to his business. He called working with Musk a fascinating experience and said that the CEO of Tesla was the best entrepreneur in his field. According to McNeil, it's difficult to think of another business owner who has founded 4 firms, all of which have a market capitalization of over $10 billion, and some of which are valued at over $50 billion. Please share your thoughts with us in the comments section below, along with your assessment of Elon Musk's performance as CEO of Tesla. Please click on the following video to see more about what Tesla has been up to in the previous few days. Talk to you there.